Hi traders, welcome back to the Desire to Trade channel. Once again, thank you for all your support and comments. They really mean a lot to us. So I was taking a step back and looking at my results from the past 7 years, really high level. And I wasn't looking at granular stuff about, individual KPI metrics. One of the things I've identified is that my general discipline, risk management stuff, it really hasn't changed. It's sort of very consistent. I make errors like everyone else does, and I make some goofy ones, to be honest with you. We could have a total separate video on that. But one of the things I realized is my P&L or percentage ROI has really improved in the last 3 to 4 years. However, it's being done without an increase in accuracy, compliance, strategy. It's pretty much the same bread and butter ones that I used, for the past 20 years. So what could it possibly be? And I found out, and I'm super stoked. Buckle your seatbelts. So I took a few days off and I went to the beaches of Wildwood, New Jersey, an old place where back when I was a kid, my family went every year on vacation and, still check it out once in a while today. I don't really go on vacation there much more, but maybe it's just midlife crisis. I'm trying to relive my youth. But I did take some of the high level paperwork with me and my results and looking at my trading stuff. And so I'm just curious to see if there's anything, not doing a deep dive with analytics, not on vacation. But I realized the last 3 or 4 years, my ROI has really improved. And I said, there's got to be a thing. I looked at compliance. I looked at all these other stats. Is it my strategy that's better? Really, nothing that much has changed. In fact, I can almost argue that I've plateaued as a trader. I just don't think I'm going to get any better. I'm still going to make the same mistakes I always do, but I just keep them in check. And obviously, my risk management's in check as well. But there's one thing that popped out that clearly is the reason for the increase in ROI. It's my YOLO trades. So the reason why I took this sort of step back was I realized that my results have improved, but really what was the root cause? One of the big problems I've had in my career, and it's one of those things that will probably haunt my legacy for some time, down the road when I'm, retired, sitting on the couch watching game shows, is that I never really pushed it. I never gave it that extra. And when you have a positive edge and a positive expectancy, and you're consistent with that. And at some point, I really felt, as consistent I'm going to be. Well, the math says you should really push it. And I didn't. It's just my conservative nature. I'm just more of a 18 to 24% return kind of guy. Sometimes I'll have a, 14 or on a great year, maybe 30. Right? But I'm just conservative by nature. I always like to lock in gains, or if I'm up for the year, the last 3 or 4 months, I'll really pull back, preventing me for that sort of home run. Well, the last 3 or 4 years, maybe it was lockdown. I'm not sure what it was, but I got a little more pushy and said, you know what? Life is short. And when I'm in a certain situation, I want to kind of reserve some funds to go for it. Now, I want to talk a little bit about this YOLO, you only live once type of trading. And I don't want to promote this to the ones that are just struggling, but I see your comments and a lot of you say you're crushing it and you're doing well and you're consistent. And a lot of you, have debates over some of the content that I provide, and that's fine too. And if you're crushing it, great. Don't change a thing. But these are a couple of the ideas that I brought to life about 4 years ago, and they seem to work. And quite honestly, I'm kind of regretting I didn't do it earlier. I look back and I have someone on my team to do some research for me and help me, particularly on the managed side. And I wanted to ask them, if I did these certain type of trades, how much I would have left on the table. And quite honestly, confession time, I didn't ask them because I was afraid to get the answer. I knew I left so much on the table. And quite honestly, based on my estimates, it has to be over 7 figures. It has to be. And, that's a lot. I mean, it really can change a lifestyle. And I guess I'll just have to live with it. I'm just conservative by nature. I'm the guy who stops at the red light, makes a complete stop, looks both ways, makes the turn. And who knows, maybe it's helped me with my longevity, because if I did push it too much, maybe I would have blown too many accounts and I would have went back to corporate life. So being my conservative style maybe has helped me with longevity, but certainly has left money on the table. So these are some of the things that I decided to help me push me out of my sort of very extremely conservative comfort zone. And I was very selective on when I did it, and I had rules and structures in place to do it. And I want to go over those and really why I did it. Let's take a look. If I had a pretty good week or I had a really good month, I would take a portion of those gains and put them into a YOLO trade. All right. And I'm going to just go for it. One that had not only technical appeal, but also maybe there was a fundamental catalyst to it. And I'll get to one of those examples in a second of what was the driver to one of my biggest YOLO trades. Now, word of caution, this isn't about when you're down 5% on a prop funding account to just throw it into some meme stock and hope it works out. All right. These are taking profits from a good week or good month or a long-term trailer that maybe went 4 or 5R that you're really only expecting to get 1 or 2R out of it, maybe taking a portion of that, 10 or 15%, and putting it to your YOLO, maybe even a long-term option, and see what comes out of it. All right, next. And this is one of those deficiencies that I came up when I did my SWOT assessment. One of my weaknesses is that, and one can say a strength, is I focus on the ES futures. That was my bread and butter. That's pretty much all I did. But I also realized I would go to trader expos and things like that, that when I was talking to other traders, I kind of got lost in the conversation when they started talking about commodities, some of the Bitcoin related coins and things like that. I said, I need to articulate myself better when it comes to those. I need to have a conversation. Don't need to be crushing it, but I need to have a better idea and better engagement. And what better to do that than actually put some capital to work in a trade? So by taking small percentages of profits and putting them into shares, and I'm talking sometimes when I started 5 or 6 shares or maybe one options contract, just to get engaged, just get an engagement level to where I can have a conversation and really spread my wings a little more beyond the ES futures and stock trading and FX. That was sort of my bread and butter in the beginning, but I wanted to open my eyes and look at some of these potential opportunities that could have a 20, 30, 50, 100 R type result. So when I started looking for YOLO trades, I really wanted 2 components. One was the technical. Obviously, if it's going to explode, it's going to have some type of long-term trend to it. So I needed a trend-based indicator. And if you want, click on the link below. The group has used these for some time now and very popular with our members. You just click on the link below, we'll give them to you. All right. That was one thing. But the other I wanted, there had to be a fundamental catalyst, even if it was kind of weird and strange, right? A lot of these things like with AI and some of the coins and the altcoins, I couldn't even explain them. But clearly there was a pattern that was very consistent with a lot of the YOLO trades that when I did my research. And that was the where are the sellers chart patterns, right? Anytime when price came down and started to push it and maybe scare it out some of the weak hands, there would just be this snapback. Here's a couple examples here I'll show on the side of the screen, right? Just where are the sellers? That's what I'd ask myself. Where are the sellers? It's not about wicks. It's not about, engulfing candles. It's just this general, how come this isn't going lower? All right, maybe going higher, but where is it not going lower? All right. And then I would sort of take advantage of that and the slightest hint. And I would use Heiken Ashley as sort of like my sort of light bulb indicator, but it doesn't always work that way. But just generally looking for that trend. Bitcoin, if you look historically, and I'll bring up a chart here for the past few years, was the classic, where are the sellers? Right? I couldn't explain what Bitcoin is, and quite honestly, I still can't. But a chart is a chart, and I know where the sellers just aren't taking over. Right? They're trying to, but they're failing. So taking advantage of that really was the catalyst for my YOLO type opportunities. What I've also done the past 4 or 5 years are my YOLO type trades really started to accelerate in the last half, especially the last quarter of the year. If I was up for the year, I would take a portion to be more aggressive. So at the end of the year, I'd either have a decent year, and if it didn't work out, an average year, or the potential to have a home run type year. And it didn't always work out, but it really managed to put myself in a position to push myself. And again, conservative by nature. I'm a risk management specialist by heart. I've taught risk management in the corporate sector and also in the trading sector. So my job here is not to say, hey, go for it. All right. Blow the accounts. If not, just open up another one. That's just not the way I teach. However, when you want to take a portion of funds that you may have some gains in and go for it to make a really good year, a very good year, or a banner year with the potential of doing that, even if that chance is small, I've really opened the doors to that. And I had to go outside my comfort zone. I am just, again, incredibly conservative by nature. So I've noticed that my YOLO trades really started to accelerate in the last half, particularly the last quarter of the year. Clearly a go for it type mentality. All right, next. And every YOLO trade I took had this technical support to it, an A plus setup, so to speak. And I would add to winning positions. So kept it small, but add to winning positions. And if it went south on me, just let it go. All right. And I had a lot of those, stop outs. I was okay with it because I was trading very small. But when it was going my direction, I was really adding aggressively, small, but adding aggressively from profits from other scenarios, other types of instruments, and things like that. All right. Again, if you're just starting out, I want you to be engaged in other markets and maybe do it in demo, but just understand that this is not about going for it, or particularly after a losing month saying, all right, I got to make up for it. I'm going to just, throw it all on, ENA or something. Not a good idea. All right. What I'm suggesting is using proper risk management to add only to winning positions. It was an absolute must. Never deviate. And if I broke that rule, I was done. All right. Couldn't do it for the rest of the year. So I was very, faithful in that regard, never adding to losing positions, but always being aggressive and adding to winning positions. All right. To summarize, 1, have strict rules in place. Don't even think about doing this if you don't have a consistent pattern of success. All right. I know a lot of the comments here, so we got a lot of winning traders on our viewer list and stuff. And that's great. But a lot of you are still in development. All right. Learn about other markets, experience them. Right? Learn how the nuances of how gold works and oil and things like that. But don't necessarily apply capital, particularly if you're not consistent. All right, next. If you do take a small position, track and monitor and use that as the catalyst to build your patience and discipline muscle. If you lose a little bit of dollars or a couple $100 on a trade, but it helps you build some muscle and patience and discipline, that is worth every penny. All right. But keep it small, but use it as a catalyst to sort of build that muscle to get you to a position where when it does happen and you want to start incorporating this type of methodology into your trading arsenal, all right, you're able to be patient. These should be longer term trades that have multiple R to them, 30, 50, possibly even 100. All right, so I hope you got something out of this, a little different angle from the sort of conservative risk manager, but it's really opened my eyes. And quite honestly, it's been very frustrating by having such a conservative nature and style. I know I left a lot on the table, and it's not just dollars. I probably left an increased, improved lifestyle to be with it. Really happy. I'm not worried about it. And it kept me in the game for a very long time. But I wish I certainly had done this sooner. At minimum, I would have learned more about it. So when I had additional capital, I can apply that appropriately. All right. I hope you got a little something out of this. Be careful. Be disciplined. Only do it when you're consistently profitable or you have a really good month and you could take some just to get exposed to different markets. All right. Hoping this opened your eyes, and let me know your comments below, and we'll see you soon.